Greetings to all, and thanks for returning to Everything Tesla Stock. In recent months, a number of analysts and stock gurus have shared their expectations regarding the performance of Tesla's stock, which has garnered attention. With multiple expert projections exceeded, Tesla is undoubtedly a firm with a bright future. With all the measures the electric vehicle business has done to increase the value of its stock, like the recently authorized stock split, Tesla may even surpass projections in terms of milestones met. Investor in Tesla stock Ron Barron has revealed why, in his opinion, Tesla will be the big name to watch in the years to come, as well as how much he thinks investors in Tesla stock will be able to make following the split of the firm. To learn more, keep watching, but before we go, remember to subscribe, like, and set on notifications to be informed about everything that's happening in the Tesla universe. Investor and investment manager Ron Barron from the United States has once again shared some long-term Tesla predictions. Barron is the CEO of Barron Capital Management, one of the biggest investors in the EV sector at the moment, owning 1% of the business. Barron claims that his company's $380 million investment in Tesla has yielded returns that are almost 20 times higher. In a recent interview, the Tesla bull disclosed that Barron Capital Management has been an investor in Tesla since 2014, when the company's stock was trading for $40 per share. Since then, the firm has generated almost $6 billion in profits. According to Barron, he is a huge fan of Tesla, which is evident from his numerous positive stock forecasts. Also, because of Barron's high hopes for Tesla, Tesla is one of his company's top 10 assets. The stock analyst is said to view Tesla not just as a prestigious EV firm, but also as one that has the ability to rule the EV market and provide substantial profits for its owners. Stay tuned to the very end to learn how much Ron Barron believes Tesla stock will be valued in the coming 10 years. In the interview, Barron predicted that in 10 years, investors will likely double or triple their money invested in Tesla. The automaker might have been the biggest business at the time, he continued. Barron's predictions are mostly accurate given his years of experience and skill in the investment world. Furthermore, with a few more years of steady growth, Tesla, already among the most valuable firms in the world, may surpass Barron's estimated milestone for electric vehicle manufacturers. Apart from producing and manufacturing a large number of electric cars, Tesla has expanded into a number of other industries, including batteries, solar products, and energy storage systems. Additionally, the manufacturer has begun investing in artificial intelligence. A number of initiatives, such as the robotaxi and Tesla Bot, are now in development and will soon be available for purchase. Like other EV firms, Tesla has faced difficulties, particularly in managing the complex supply chain environment. Yet despite this, the value of its stock has increased. Although production issues and inflation are major financial setbacks for the corporation, an investor such as Barron does not appear to perceive these issues as long-term obstacles. The Tesla investor claims that since his organization conducts private research on businesses they wish to invest in, he is less concerned by this revelation. He went on to say that his organization looks at a company's growth possibilities rather than its stock value, since they invest in the business, not the stock. Barron thinks it's prudent to put money into businesses that can expand far faster than the economy and that can withstand severe market headwinds. Based on Tesla's past performance in the market, these attributes best sum up the electric vehicle company. Thus, it makes sense that Barron Capital is so excited about its investment in Tesla. Even though the corporation just sold shares of Tesla for over $1 billion, 12.8% of all assets under control are still invested in Tesla. This does not indicate that the investment firm is less optimistic about Tesla, despite the appearance of such. Barron has also disclosed that his company sells its equities, in part, when an investment does exceptionally well and accounts for an excessively high proportion of a diversified portfolio. The corporation progressively cuts down on its shareholdings in such a scenario. Companies still view Tesla as a worthwhile investment for a number of reasons. The manufacturer of EVs has steadily increased the number of vehicles it produces over time. More than 3 million electric cars have been built by Tesla to date, exceeding a record that many of its rivals have not even approached. Elon Musk, the CEO of Tesla, has disclosed the company's intention to create 20 million vehicles annually by 2030. Additionally, the CEO of Tesla stated that the company is working toward reaching a manufacturing rate of 2 million cars by the end of this year while speaking to investors at the company's most recent annual meeting. Even though some analysts questioned Musk's prediction that the firm would produce 20 million automobiles by 2030, it's still intriguing that the company has such a big idea. This prediction may come to pass given that the corporation is already producing over 3 million cars, up from a production value of only 3,000 cars 10 years ago. Given that Barron has said that Tesla has the capacity to create at least 10 million electric vehicles annually, it is possible that he will concur with this. To reach this goal, Musk made reference to some of Tesla's intentions to grow its gigafactory network. According to Musk, Tesla might expand its current lineup by constructing at least 10 or 12 new gigafactories. The objective is to raise output to roughly 2 million units per factory, he continued. In several of its current gigafactories, where Tesla has been attempting to boost production, the results have been encouraging. As of August of this year, the automaker's Shanghai gigafactory alone had produced over 1 million automobiles. Tesla's Berlin gigafactory, meanwhile, is expected to generate a 30% gross profit margin for the company this year, according to UBS analyst Patrick Carmel. Additionally, Australia and New Zealand have begun receiving Model Y deliveries from Tesla. Fortunately, Tesla is not the only company making headlines. SpaceX, the spacecraft manufacturer and launch service owned by Musk, is also starting to appeal to investors. As Tesla works to build Starship for its maiden orbital flight, this is the firm to keep an eye on. Musk said that it is likely that an orbital flight will be successful within a month or so of the announcement. This may be the reason why financiers such as Ron Barron are beginning to approve money for this business. In a recent statement, Barron said that he had increased his interest in SpaceX by $100 million, making it one of his 2 biggest investments over the last few months. That sum of money is quite large for an investment. After 10 years, Barron anticipates that his investment in SpaceX will generate a return of 20 to 30 times his cash. Should events ultimately transpire as Barron anticipates, SpaceX may surpass Tesla in size in the near future. In 2022, the private space business raised almost $2 billion. While Elon Musk's internet satellite firm, Starlink, is expected to go public in the next 3 years, Barron does not anticipate that SpaceX will go public anytime soon. Ron Barron is a huge supporter of Tesla, which is not unexpected given that stock investors view the EV business favorably. Barron appears to be more interested in Tesla's long-term prospects than just its present success. When selecting a firm to invest in, Barron argues that one of the most crucial things to consider is its competitive edge. An important predictor of a business's future potential is how it currently functions and what makes competitors difficult to match. While most people know what a growth firm is, Barron pointed out that not everyone fully understands what a competitive advantage is. According to stock investors, Tesla's competitive edge stems from its culture of rapid innovation, as demonstrated by the company's latest updates on anticipated initiatives. Due to its background in producing both electric cars and batteries, Tesla is well positioned to carry out some amazing initiatives in the future and eventually take the lead in the EV market. According to recent reports, the Californian government intends to phase out its reliance on traditional gasoline-powered vehicles by 2035 by increasing the sales of zero-emission vehicles. This is an attempt to combat both poor air quality and climate change. Similarly, Tesla's FSD function has the potential to grow its customer base and auto sales in the future. As technology across the globe advances, people are more likely to choose solutions that make daily tasks much simpler. EV owners will prioritize this option moving forward, as it makes driving safer and less stressful. Tesla has a full self-driving feature. In the upcoming years, factors such as these will play a significant role in the sales of Tesla's electric automobiles. If all goes according to plan, Tesla will be able to reach its financial targets and raise the